Welcome to first pullback for Thursday, May 21st. And so starting off here today, we are looking at the S&P 500 and what happened right when the market opened over here. You can see we went straight down, hit the 38% to 61.8 previous day low versus high. You can see right there hit the 38%, went right up and hit the 23.6 for a real nice easy trade right at the start at the next trading day. Obviously it went higher, but that is all I'm looking for right there. So that one was super easy. The past couple of days have been really nice. They've been some really good range days for it. So then from there, it went into the long overnight session. So I didn't get here at my computer at about 7 in the morning right here. And so what we had going into it, what this simply was right here was just a measured move. You see the low to the high, went up there and hit the target and then just sold off after hitting that target there in the overnight session. So starting off for when I got to the computer, what we were looking at, we were still in a positive territory for the day just because we have a low right here and it's been making new high, new high, new high, new high, new high. You can see all the way up there. And the only way for this for me consider the trend to be down is if this kind of the opening bars down here went and this one down here made a new low. So it had to go below 4707.50, and I think it got really close but didn't quite hit it. 4707.75. So it was a quarter of a point away from making a double bottom and half a point away from making a new low. So from then what we would have done is we would have started looking going here to the downside for it, but since that didn't happen, we didn't have to worry about it. So we keep on looking here going to the upside. So at this time, you see it hit down to 23.6, did not continue its move up to go hit up here to the 1.146 at that time. Now, it obviously did later, but this is such a weird one right here where it's a tick away from being a double bottom, but then it went off of there and eventually hit the 1.146 to make it a valid move and hitting that right up there. But what I was looking for was we can see price go down here, goes below the 38% line right there. What time was that? At 5:25 a.m. Then it's just wandering around right here. It goes down and hits the 0.764 Fibonacci retracement level. So once it does that, the exit moves to that top one up there. So just drawing this box right here. When price hits the 38, that is what we're looking for to initially get into it. Then from there, the target we're looking for is the 23.6. But when that doesn't happen and the price continues to go down to the 61.8, then we get in again right here with another contract, and then we move our contract up to the the exit up to the 38% line. So the bottom of the box is the new entry, top of the box is the new exit. And then if price continues to go down to the 764 level right here, we get in for a third and a final contract right there. And then the exit moves to the 0.447 exit line right there for it. And so that is how that worked. So when I got in there, ended up getting in two contracts there, one at the 61.8 and then here again close to this 764. Since I fortunately missed out on the 38% line, I was sitting pretty good right now for it. So price went up, knocked it out real nicely here, right about half an hour after the open for it. And so that trade was set and done right there. And then from there, what we had over here was we had one more trade. So using again the low back there at 5:15 p.m. the day before, and as you can see, what I put on a little bit earlier is again it's a weird looking measured move, but it is a measured move for it. We were a tick above it from being a double bottom, because if it went down and hit double bottom, then I would just use this one going up, which really doesn't matter, but that's what we would have done, but we didn't have to because it was a quarter of a point away from hitting it. So went down, went back up, there we go, it's a measure move. We hit the target right there at the 1.146 extension level. We make a new high. So once we make a new high, then we start drawing our Fibonacci retracement tool up, and we're looking for the next retracement back down. So went back down, hit the 23.6, and you can see this market was not in a super strong range or a super strong trend, because if it was, it usually hits a 23.6 and then goes right up to the 1.146 level. So good for my trading style. So went down, hit the 38% line right here, and that's the exit we're looking for up there, but it went down and hit right off the 61.8. I'll get in a little bit closer to it. Hit the 61.8 right there. So I got in again right there, and then got out there at the 38% line right there for another good trade for that one. So that was all for the S&P 500 for today. Some good movement here within it. Going into tomorrow for it, here we have the daily low up to the daily high, and this box right here, the teal box, that signifies the 61.8 to 38.2% Fibonacci retracement level. So what I'm looking for when, let's see, we got about 22 minutes right now until the market closes, so probably won't be a whole lot more movement unless some crazy news comes out. So what I'm looking for is right when the market opens, an hour after that, 5 p.m. Central my time. Looking for price, hopefully, to move back down here to 38%. So when that does, I'll be looking to get in right there. And then have my exit right at the top, 38%. But price continues to go down, I'll get in at the 61.8, move my exit just below the 38.2. And then finally, if price goes down, hits the 764, then I'll get in again there, and the exits move just below the 0.447 retracement line. So that's the setup going into tomorrow that I'm looking for here in the S&P 500. Going into the Nasdaq, very similar setup as the S&P 500 today. When the market first opened, we had pretty much a beeline down to the previous day's high-low channel right there, 61.8 to 30.2. Hit right off of it, got in right there, exit at the 23.6, so real nice trade right there, just like the S&P 500. And then from there, we had close. I'm not sure if this was a measured move right here. Did it hit it? Nope, you see that? It didn't hit that measured move right there. Really close, but didn't quite hit it. And so what we do is when price creates a new high, is I go ahead and continue to draw the Fibonacci retracement level up to the top right there. So when I got in this morning, again around 7 o'clock, price is down there at the 61.8. We can see it had hit the 38.2 right there, never hit the 23.6, went down, hit the 61.8, and then went down and hit the 764 right there. So yeah, I wish I had been able to get in those two as well, because when you're able to get in the 764 area for it and it goes up and hits that, that's a real nice win right there for it. But I got in right here, and I could have gotten in again right there for the Nasdaq, but the Nasdaq has a lot higher margin and a lot bigger moves for it, so I decided I was good enough right there for it. So there, hit the 61.8, didn't quite hit it right there, then down to the 764. So there we go right there, and then we draw the top of it is going to be the exit right up there. So hit down there, powered off of that, hit right there, and we are out of that trade, and that one is said and done. And then it never made new low, came down, and it truly did make, I believe, yeah, it made just a measure move. There's the ABCD move. A, B, C right there, and then D right up here. It hit the 1.146 right up there. So when it made the new high, when it broke this level right here, we go and we continue moving the Fibonacci retracement tool up. And this move right here that started, where's the big candle? Yeah, 12:10 p.m. That was when news came out that Tehran was going to, they're reviewing some peace agreement between them and U.S., something like that. Anyways, that's why it went up right here. Right when that happened, all the markets went up and oil went down. So that's the reason why we had that nice little move. Otherwise, if that didn't happen, I think we probably would just middled around right here till the end of the day. But we got the news right there anyways. So we draw the new high to low, and then we look for retracement. So there we go, down to the 38 right here. Goes all down, gets close to 61 point, but didn't fill me right there because I have my entry right about, probably right there, so maybe a tad bit lower. I don't have it right on the 61.8, just slightly off of it. But anyways, didn't get filled, but price powered back up. Now I got out right here a little bit early for it, just get out, because at that time it's 2:25 p.m. and I don't really like holding on to stuff when I don't have to overnight. Sometimes I do, but especially not for NASDAQ, just because the margins are so high, and for a while you have to have 100% of the margins for it, not just the day trading margins. But anyways, got it right there, went up, finished up, and that was the last trade right there for the S&P 500. So then going into tomorrow, same thing for the S&P 500, just like the Nasdaq. There's the 61.8 to 38.2. So what I'm looking for, hopefully, is when market opens, we'll come back down just like yesterday, get in right there with the first contract. The exit will be at the 23.6. If that doesn't work and price continues to go down to the 61.8, we'll have another contract to get in right there. The exit moves just below the 30.2. And then finally, if price continues to go down, the exits have not been hit yet. It hits the 764. We get in again right there, and then have our exit, move our exits just below at the 0.44, was that 0.447? Yeah, Fibonacci retracement level. So that's the main trade we're looking at tomorrow going into the Nasdaq. So thanks for watching. This is First Pullback. Please like and subscribe. Talk to you later. Bye.